Today I will be teaching you, not necessarily teaching, I will be taking you through the analysis of gold till the present price action. So as we open trading view, this is GBP JPY. So I'm looking for gold. I usually trade gold and or GBP JPY. So we are just going to focus on the current price action. So let me delete everything that is detailed here. So when we come to the current price action, first things first is we notice that price is on a continuous uptrend. Okay, price is on a continuous uptrend. For those who know what a trend is, for me, I don't draw trend lines, but I like to see what the trend is. The next thing after you find the trend is to identify a break of structure that is in favor with your trend. And notice you're on the daily time frame. Okay, so this is a break of structure and it is in favor with the trend. So once I have that break of structure, what you understand is that pullbacks are common after we have taken the external liquidity, because ideally price moves from internal imbalances to external imbalances or external liquidity. If you look at this price action from here to this point, we had this pullback into this golden zone and then we broke structure. Okay, so this is a pullback, and so I'm looking forward for a similar price action. So you see, I'm looking forward for price to come back into this zone just like it had done before, because market has that tendency of repeating itself and everything like that. So the other thing that I also notice is we have this strong displacement to the upside, and I also notice this fair value gap that was well closed. Okay, price had closed this fair value gap. So and we have this order block on the other side that was left, that was never mitigated. Okay, so we have the buyers in mind. We know it's a pullback for potential continuation. Also when you minimize this demand into this zone, you notice that it is lying on the wick. Okay, it's just how simple I try to find the buyers on this market. So my demand zone, I believe it is hidden inside this wick. Okay, so this is my hidden demand zone. So I'm going just to indicate this is my, I have that thing for demand. Oh, not necessarily. Let's just use as a confluence order block, but on the daily, so I know in the 4 hour you're going to find something. So yeah, in the 4 hour, this is what we have. Yeah, the last candle before the push higher. Now, what is causing the price to drop? First things first, if you're a smart money trader, you understand that we trade based on structure. So you can see we had this high, created a low, created a higher high, lower, a higher low, a higher high, boom. This is inducement. Now if you understand the concept of inducement, you know that after price broke this high, once it took this low right here, this is now our inducement. Okay, where we had stop losses that were lying down here for buyers, and we also had a sell stop for sellers. So price was targeting this inducement level. What do we expect to happen after the inducement? Of course, we want the price to break this high to continue with the trend, but this never happened. So price came into this high but never broke it. Okay, price was unable to break. Now since price was unable to break this high, now this low is no longer confirmed. It's not yet confirmed. What is confirmed is this high. This high is confirmed now. So the structure looks like this. We have this one and we have this one. Okay, we have a line, but this one is not yet confirmed because price did not break above. Okay, I hope we are in the same page. Now, since price did not break above this high, okay, where was our last demand? This is our last demand, and it's the conference order block that I am talking about. That's why I am still optimistic that price will tend to sweep this low, and this is going to be our sell side liquidity. This is going to be our sell side liquidity. Yeah, SSL. This is our sell side liquidity. Now, I want us to focus on the daily candle, since today is on Tuesday, and I want to how you could have traded this pair from Monday. So this is Tuesday. Now this was on Monday. Notice on Friday, that previous week, the candle closed bearish, because this is our open price here. Price manipulated higher, and then manipulated lower, and then closed at that point. This candle, this is a Friday candle. Of course, that indicates bearish potential for the next week. So when you came into the market having this kind of bias, knowing that there's going to be a potential pullback, since price was unable to break up here, and this is your potential draw on liquidity. Okay, so we mark our opening price. This is our true open price on Monday. Now we want to assume that we are trading on Monday. So what happens is, whatever I look for is, I usually map on the forward chart so that I can find that the accumulation, manipulation, and distribution, because after the open, price has to push into the opposite direction to give that Judas swing before going into the expected direction. Okay, so on this particular day, this is on Monday, this is our first true open candle, followed by the 4 a.m. candle. This is Nairobi, so it's Kenyan time. And then we have the 8 a.m. candle, which is the US midnight open. So you have to narrow down again into 1 hour, a lower time frame. Just go lowering the time frame. So how would we have got into this particular trade? Now anything above this zone, if you are to trade, you have to sell anywhere above this opening price. The reason being, the previous day was bearish, and so we have the potential of having another bearish day. It's that simple. So going to the 15 minutes, I usually trade after the Asian has finished, the Asia has done its thing. So you come here and map your Asian range from the open. I'm going to map the Asian range from the open to the midnight open, that is 8 a.m. Kenyan time. Yeah, that's it. That's my Asian range. So what I want to see is price grabbing liquidity. For me to take a sell, I need price to take the high of the Asian range. For me to take a buy, I need price to take the low of the Asian range, and that's what price did. It came and took the high of the Asian range like that. So this is more of liquidity collected. Okay, that is liquidity that was collected up here, and at this point price has the ability now to sell off. So what do we notice? We notice this nice order block that is left behind. So we want price to come back and tap us into this order block so that you can keep dropping. So on that particular day, the trade never played out, although price went and grabbed our Asian range low, but it never closed below it, showing that the sellers were not that strong. Even also, if you look at the price action here, the sellers were still not there. So we are going to extend our zone here, patience all the way. So this trade played out the following day, which was on Tuesday. So we are going to mark the Asian on Tuesday, the Asian range right there. Okay, this was our Asian range on Tuesday, manipulated to the, you can see price manipulated to the upside, grabbing the Asian range high, tapped into an anticipated order block. Now you only have to limit, you have your limit order placed there, and stop loss around 40 pips. there, and now we are going to target the last low here. And if you need to hold even more, you still have this sell side liquidity that we mapped on the daily, if I'm not wrong. Yeah, we mapped it on the daily. So you have your nice swing trade of 1:8, that is around 320 pips, you know, 320 pips trading gold. 320 pips. What it took me is just patience, discipline, and just following a strategy and proper execution, and the trade is still running. So guys, I've come to the end of the video. The idea was to teach you how you can find buyers and how you can execute your trades on a day-to-day basis. Okay, you don't chase the trade, you don't FOMO at this point, you don't FOMO, because many people are waiting for it to tap here, but it never did on this particular day, but it came on the next day and it did deliver. So the algorithm never forgets, so just know that.